Hey team, what's up? Good morning. Market opening slightly out of DD bands earlier. Tucking back in just momentarily. You know, we do in irrational days like this. Good morning, good morning. Not really much to trade on this. Moves too far, too fast. Let's look at the resilience right out the door. It's negative. I'm probably going to be trying to pull back a little. So, DD band is roughly right here. Let me do the overnights real quick. 231. $280. So outside the DD band, somewhat irrational right out the door. There's not really much to think about on that one. So when you finally hit that irrational kind of limit, its markets can be a little bit more random. But you hit there, we don't normally bet that it breaks the band. It keeps going. A lot of times it can reverse off of that and pull back. Be careful for hedge pressure breaks today. As the open above hedge pressure, it likely wants to try to aim and close above hedge pressure, but keep an eye out for it. Resilience being negative is kind of testifying that this could possibly continue to move lower after yesterday's move up. Large 30-something point move overnight. These are things I don't once you open at this distance, I don't normally trade this particular thing. There's also a yellow line at 53.65. Talked about this yesterday. Which is there. That's how accurate yellow lines are. Remember, it's 65.25. The S&P is likely to get somewhat of a bounce at 531. So normally we don't bet, or we don't train that you bet. Once the market hits this thing, it's hard to determine that it's going to go further than that or not. It gets to be very random. As soon as you hit yellow line and a green line at the same time, especially both of those, two hard resistances, you can be very careful. You get the resilience numbers. The S&P resilience is negative. Nasdaq resilience is negative. So the market is trying to sell to fill the gap to the downside. The gap is trying to fill. I'll be right back. Good morning. All right, let me. The S&P is pulling back, continuing to pull back. Moved really far post NVIDIA earnings last night. So with resilience being less than 0, this is very possible and can forecast a hedge pressure breaks. Pretty common. With the DD ratio still being greater than half, bull zone bounce is likely expected. It's a pretty strong scalp inside of there. So that's what we're looking at today. Let me make this a little bit bigger. John, baby, nice trade, nice trade. Likely to pull back a little bit more. The S&P is heading towards the overnight dynamic 53.31. Is the overnight pivots still available? Put this on the hourly candle. It's pretty swift. It's pretty gross looking. You hit that yellow line and it's rejecting. You hit DD band, it's rejecting. Remember we calculated the yellow line yesterday, and look how basically, like, this is one target we're trading to, and then that's another target we're trading to. These are both targets that we calculated yesterday. Actually, yesterday on the stream we talked about yellow line and showed how to do it. So I don't know what this ends up wanting to do now, but ultimately, while these resilience numbers are negative, I am looking for this to retreat to fill the gap. Resilience is the flux inside of the redistribution zone. We gapped up, and now the stocks are selling off after they've gapped up. So we can go ahead and look for, on the stocks, like half gap breakdown. Here we can see which stocks are retreating after the gap up. A lot of them didn't really gap up, so let's actually just look for less than half stocks. About 14 stocks have opened and broken down versus the number of stocks have opened and broken up, only 4. Not a lot of stocks are switching sides to the upside, more of them are switching sides to the downside. Half gap below. I mean, all your stocks are not gapping up like the futures were. All your majors are pulling back. This is a downward signal today. Right. On irrational days, the way our teachings go, once you hit that DD band, you're pretty much done. Any trades from here that I want to take are going to be small if I ever even do it, like really small, because once you finish that move, there's really not a lot to take from. Like if I want to just gamble a short trade, I'd throw in like a couple micros, bet that it falls to the downside. Okay. The monthly maps are still really strong. This is like very, 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 very strong. I mean, look at Nasdaq today. Nasdaq couldn't be more bullish when both the bull side and bear side are sloping down like this. You've got bulls and bears both longing, or both buying. Bears are squeezing their shorts, bulls are getting out of their longs. So while today might be the down day in this bull trend, tomorrow certainly pick back up and keep going, right? So when I see days like this, I don't try to fight it. I don't try to long it. I just tell myself we got maybe like a dip, and tomorrow I get the rest of the trade that I want to get. SMCI. Let's see. There's options that should work. Or if we've pulled it up before. If nobody's pulled it up before, then it won't have a reading today. No liquidity map data found. So it didn't run any calcs on it, but probably because it's not in the database. Does everybody see all the signals are just really bad? Like this is not a dip I'm buying, something I'm really wanting to try for. It might likely try to bounce at hedge pressure on the S&P. Why is that pulling liquidity map? Because liquidity map only pulls stocks from a preset list, and we pull it at a certain time every day and run the calculation. And if nobody's ever looked for it before, then the list doesn't know to pull it, because there's infinite number of stock tickers out there in all the markets globally. So we don't just look for all of them and calculate all of them and have our servers calculate all of them unless it's a stock people care about. So if you search for it and nothing shows up, then you're training the list to look for it every day from now on. That we built the list dynamically like that. Let the users decide which order that the equations are run, which tickers. We made it dynamic like that, but we didn't just like, okay, here's 200,000 stock tickers, let's do them all at once. So we expand as far as the breadth of what our users would do dynamically. So there's a new hot stock ticker everybody's talking about. If you're basically adding it to the list by searching for it, then it pulls the data tomorrow. And after a certain amount of time, liquidity map data is no longer viable when you calculate it too far after open. There's a sweet spot, a window where it's accurate. If we were to pull it now, once you ask for it, and then go pull data and then try to calculate it, it wouldn't be the same numbers and it wouldn't be as accurate. Like it has to be pulled exactly when it's pulled and calculated exactly when it's calculated. So the reason why we don't retroactively go do it like today if you type it in and then we go get the data and just calculate it on the fly. It's because roughly about 10 minutes after the market opens, the options data is so obscured that the liquidity maps come out different. We did a test on that actually. So if it doesn't have options, that's another thing. So we'll see. Let me double check something. It does have options. Let me look. Okay, did it work the other day? Yeah, it does have weekly options. Oh, interesting. I'm not sure. I can check the database after my stream and see why there's no data. So looks like we didn't pull it. There's that hedge pressure bouncer here on the S&P right here. Resilience negative, but the S&P being here, this is the first support you're going to get. See how really strong our hedge pressure bounce is, right? Now again, this is not a long day that I'm going to take any longs. Still, the data is pretty nasty. Resilience can forecast hedge pressure break, so I don't bet on the long for long. You know, there's clearly there's a bounce right there. It's going to be slightly random since we completed the DD run. So looks like market's coming down today, baby. The VIX is starting to move a little bit to the upside. SMCI. I'll have to double check. We recently transitioned our database, data pool responsibilities, and all that stuff from the original contractor who built it for us before we even built the Rocket Scooter company. So history, remember the old app that we had? This list that I'm talking about, the dynamic list, was all maintained by a third party before we hired developers work for us directly. We worked with a company that was designing and developing for us, 5 years ago, and so we took responsibility of all the data pool and all that stuff. And so I should go double check that under our control that dynamic list is still functioning correctly. So something, if it's just not pulling it because of something we did, I'll have to go check that out. First and foremost, I'm going to make sure that it's on the list. Let me actually can check that right now. DX. Customer link to the list. Okay. Symbol. SMCI. It's here. Data for it. Let's double check. Oh, we didn't pull any data for it. Status code 500 timeout. Okay. And let me double check this. I'll give you guys a little thing. Here's my little diagnostic tool that I wrote. Check on tickers. SMCI, we have data for it. Looks like a timeout request. So I will double check that. Did we exceed some kind of... So it is on the list. So you did search it and you did teach the list to put it on there. Okay, I'll put in a ticket for it. So on the user list, let me make it bigger and check. So I can check on all the tickers to see what the status is. We got data or anything. Here's some stats for you guys. On the user list, we have over 1,000 tickers that you guys put together, things that aren't on our lists. Double check. MHE error. Okay. It'll check some other ones on the list. Chewy came out. That.
They said that since I worked full time, I wouldn't be able to go to school. But with WGU, I was able to do my classes on my own time and take all my tests online when it suited me best. Learn more at wgu.edu.
There's that second run. There's that bull zone tap on the S&P. Exactly what we're looking for. Look how swift that was. I just drew that today. Everybody here, were you guys longing? Were you guys shorting? Let me know. What'd y'all do? Did anybody long here? Or did anybody remember the video? Resilience predicts hatch for sure break. It's like I drew. Shorting. You guys are solid. Y'all are fucking solid today. That's sexy. Short off the open. You guys are sexy. Y'all are fucking great. You guys know how to trade. So bull zone, typically you have, so this has moved very swiftly. This is a bull short up now at the bottom of the bull zone. So the only bounce, if there is one, would be there. Only bounce, if there is one, is there. VIX has got a reversal point here. Okay. Creeping up, yeah. So this is the bounce if there is one. It's right here. If there is one, this is it. If there ever is one, this is the only one that we have in our tool set. Pretty good, right? So market open, started pulling back the hedge. Resilience was negative the entire way. Resilience don't lie. Resilience is always right. Now, direction of the market, of course, let me clarify what that statement means. Resilience is always correct in what it's telling you. What it's telling you is a weighted range of stocks in the S&P or NASDAQ. We actually have three of them. Russell. It's telling you, while weighted by market cap, 0 is where half of the market cap is in the top of the box of that index. The other half of the market cap is in the bottom of the box of that index. So when this number is less than 0, it's telling you the majority of the market cap has filled its gap. And when I say resilience is never wrong, it's just because it's telling you what is. It's not predicting anything. So resilience is telling you the majority of the stocks have filled their gap already out the door, while the S&P is gapped up. Huge arbitrage opportunity. All of our traders here, throw me some rockets in chat. It's always yes in chat that you understand that. Today, you did anything, or you saw anything, or you sat out on a long, you didn't chase, got these bounces. You knew that resilience being negative out the door was the likely candidate to fill the gap. And did you guys all know that? That's straight from our training. There's a video on this very topic, and when this case shows up, very hard not to acknowledge it. Share where the video is. In the extra section. Let's see. Extras is a lot of cool extra videos. Resilience can predict a hedge pressure break is literally the first video in the extra section. The extended learning. Resilience can predict a hedge pressure break because in our training, what we teach is that of all the indicators that we look at here, we teach you that the ranked in order of importance in your decision making, 1 outranks 2, 5 outranks 14, etc. The higher ranking number signal is stronger than the other ones, either based on volume, if you remember from our training. So volume, these produce higher volume. These, whatever pivots are up here, produce higher volume than pivots are down here. It's like liquidity map, hedge pressure, monthly hedge pressure, all down here. They're very high pivots, but all these other things outrank it. All these other things produce stronger volume, catalysts and DD band and things like that. So as you see, your resilience numbers outrank your liquidity map numbers always. And your DD ratio outranks all of those. So in your, what we call the big three, DD, resilience, liquidity map, if they're pointing different directions, DD takes the highest priority. Resilience takes the next highest. Liquidity map takes the third. So if you're here and you have bull long up on liquidity map, the resilience is yanking it down. The desire to fill the gap will create more volume than the desire to support at hedge pressure. You saw it exactly because of the ranking. You saw the exact thing today, and that's why there's the very first extra video is on this topic. It hits hedge pressure, bounces up. None of us likely took a long there. I don't know what you guys do. If you follow the training, this is a dummy long, right? It's a bull trap, and then it just falls to fill the gap. And that's why I drew the arrows there. So it's a really strong topic. Now DD ratio and bull zone bottom outranks resilience, so it's very likely, more likely to move this way from here than it is to go down further, which is why I have the arrow bouncing up from there. We all see that? So this is a great candidate for a big old bounce today. Here. Plus VIX bumping into close to hedge pressure. The rare thing is to break hedge pressure on VIX and move. The more likely thing is that inside of here, the market has a quick scalp somewhere inside of this range. So any shorts that I would be in, if I were in a short, this is where it ends, and I don't try to short anymore for the day. This was a fantastic move, 20, 30 points. So anybody gets that, you know, be proud of what you got. There's nothing to do from here. Yeah, VIX to hedge pressure, reject, SPY at bull zone, bounce is good. So the long scalp is now going to take over here. And the degree of that is pretty random as well. Again, irrational days touching DD band, I just don't normally trade these from here. So what's likely to happen from now, that I believe, again, this is not investment advice, but we're kind of losing bull zone without a lot of momentum. It's very likely that this inside of here, so let's remove the first arrow that I drew. So it's pretty nice, right? So sitting up here, to forecast another 20-point drop, right? That resilience and predict hedge pusher break is a really strong signal. So this could take a one final sweep and then likely end up over here. The rule of if that number is greater than half, we open in bull zone, we're more likely to close in the bull zone 75% of the time. Y'all remember our back test, right? 25% below. I haven't made a trade all week. You're only able to trade over the weekend where it gets in the way. So FOMO for real. Ours really helps you with the patience. Awesome, Jay. Awesome to the max.
The best tech solutions for small businesses with the power to unlock new AI experiences through Intel Core Ultra processors. Lenovo.com. Where to look for the tech you're looking for.
A little bit of movement there. How'd I do? Spent a lot of time learning this technique. Now it's scalp wise, right? This is the attempt to be long. It's gonna fight inside of here for a little bit. Is it an attempt to hold bull zone? Be very careful today. The VIX breaks hedge pressure. This is gonna get very crazy. There is a second yellow line below us, 53.17. Yeah, so once you clear up that DD band, right? The start of the day, that's classic. My rule is I always sit out on these days. At least in my real account, I would not put a lot of risk on it. But doubly for challenge accounts or contest accounts. The contest account requires extreme commitment to my strategy. The goal is to prove that the strategy, that I trade it well by following the rules. I'm not trying to cheese a contest by YOLOing into trades. I'm going to follow exactly my rule, and I always follow. So once CD bands are tapped, usually a lot of times you'll see me announce that I don't even stream. But so I'm deciding to still stream today. Normally I'll be like, hey guys, we hit DD band, we're outside of DD band. I'm going to call it. I'll see y'all tomorrow. But we pulled back in significantly, and I assumed that we'd probably have a day like this. So I actually streamed to teach you guys this lesson. As soon as I saw bull long up with a negative resilience, I was like, okay, I love this. I love this lesson. I can't wait to tell everybody how this works. All right, what do you got? Maz, 1K on the day. There you go. Let's go. Let's go, baby. Killing it. You guys are killing it. Nice, nice. Sick, Anthony. Way to go, way to go. 50 points on NASDAQ with 5 micros. There you go. Well, looks like this will be a down day, but I would look for a long when NVIDIA is around 1,000 if it gets there. Yep. So this now is going to be a toss-up. If you were to, again, put a gun to my head and say, Matt, what happens? I say 75% of the time, We close in here. 25% of the time we close down here below the bull zone. This is the split. So when DD is greater than half, under all circumstances, meaning irrational included, the split is about 75-25. It's roughly, I can't remember the numbers, 80, like 80-20-ish. Wait, hold on. Humble, if you're here, what's the percentage on rational days? It's higher. Rational only. Do we have a number for rational only with hedge break? I'm sorry, with rational only excluding hedge break. What's the split for bull zone?
Shopify helps you sell at every stage
Probability.
of your
Oh,
business.
hell.
Take it
Hold on
in
one second.
and go big. Like
I have 6 bajillion tabs open. This always fucking happens.
businesses that grow with Shopify. Sign up
I probably literally have over like 100 tabs open right now. Let me refresh my Rocket Scooter instance. Give me a second, you guys. I can't wait till marketplace stuff kind of comes and hits a chill spot. We can get back to doing like back tests and a lot of this fun stuff we've been doing lately. We made a video on it. Art, get it, baby, with that inky short. Nice. Oops, wait on, let me remove this here. Killing it, Art, baby. I love it. So it from right here forward, if you're doing anything further, you're gonna be a little greedy, so just be careful. From right here forward, the market's gonna get this is where the market's gonna decide what it wants to do. Oops, what was I? Oh, that was right there. Okay. So from here, the bulk of the day's move that's predictable is likely over. If I were shorting from here to here, I don't take a further short against the DD ratio. Being bullish, see how it's trying to support. It wants to support, but the selling could overwhelm it, right? This selling, how many people were squeezing right here, we don't know. And that could continue an additional move. The good scalp that I do like to take sometimes is if this falls to bear side right here, if I have some kind of indication like VIX is in decay, I would long it to pop back to the bull. I would long across the liquidity map, sorry, the liquidity pocket, just like that. So for the Robbins Cup stuff, I'm not trading when my rules are broken. But in my real account, I am trading for sure. Here, that's me today, 2400 or whatever. So don't think I sat out on my real account, but just my challenge account. I didn't. 2600 bucks, something like that. have to short as well. So in the challenge, I don't trade this shit at all. Throw a mini at it, let it fall, grab a mini, let it bounce. But that is it. Pretty much all you can predict for today. Probably gonna call the stream. Anything else you guys want to talk about while I'm here? Let me know. If not, we'll just call it a day. I'll hit it. Sometimes I usually don't do that trade though. A lot of the time, I usually sit out. So that's why I like to teach. Better to sit out. But a lot of people here, advantageous, go for it. That's why I kind of try to on stream practice when I preach. But sometimes I might want to take a little bit extra risk. But the goal is not to teach people to trade when markets are rational. It's to teach people risk management instead. The stream is all about that. How to use the tools correctly. If you feel like you're taking a little bit an extra edge, like I said, I'm not throwing 5, 6, 7 minis at it. Just one, something tiny. Get something off of it. Will lifetime get marketplace? Oh, that's the first thing we're gonna do. We talked about this last night. I created the transition plan last night actually. It's on the task list. We have 4 major items we got to fix and finish before marketplace can go live to the user side. Like I say, it's live now. We're just not marketing it to get people to come in yet. And people are stumbling in, but we're cleaning it up to make it more beautiful, make it pretty. And as soon as we do that, the first thing we're gonna do is transition lifetime over. Then the second thing we're gonna do is transition the members over and try to maintain everybody's price and what they have. So here's this decay off of VIX, and here's this bounce, a 75% chance to be in the bull zone. Yeah. So people remember for the Robbins Cup, for the challenge, I'm being very cautious about what I take. I really got to follow the rules. But you know, I hate to get to the end of the contest and somebody say I cheesed it, like, oh, he got lucky, you know, got some lucky plays, and you know, it's not like I got on the leaderboard when I did by just YOLOing a couple of trades. You saw me grow. The percentage just went up 5, 10, 15, 20, all the way up to about 50, 60, whatever it was when it peaked. Then I got bumped, and then took some losses, still in it. And now markets good, but now marketplace is taking all my time in the morning, so I'm not getting a lot of extra time to trade as much as I used to, like for 3, 4, 5 hours at a time in the morning. I only get about an hour. If I don't get the trade I see in an hour, then it's not worth risking for the challenge account. So sometimes life gets in the way of trading, but marketplace is looking dope, so I'm very excited about that. right, guys, gotta bounce. Love y'all. Didn't sleep last night? Oh, why not? Let me know in chat. I'm gonna get out of here though. I love you guys. Got a lot of work to do today. Rundown. Final stretch. Marketplace. Final stretch. I've got some exciting news. A potential thing. Technology improvement thing. We might be starting a project. Maybe. Related to funding programs? Rocket Scooter? There's just a hint. I take a trip next week. Revolving around this. There could be a day when you're trading your trader funding programs inside a rocket scooter. Just give me a hint.